Monthly masterclass that will help you build your network among respected entrepreneurs and business leaders and guide you on the opportunities available and how to mitigate any challenges of investing in Africa. Our African Business Club will also introduce you to our team of African business mentors and fellow investors, all tailored to your very own needs. Among the modules covered are doing business in Africa, raising investment and trade finance, importing from Africa and exporting to Africa, agribusiness opportunities in Africa, and understanding the African market. You can also register for online diploma business courses with a flexible learning schedule. Some of our courses include Diploma in Digital Marketing, Diploma in Sales and Marketing, Diploma in Finance Management, and Diploma in Logistics Management. Certificate courses run for 3 months, while diploma courses run for 6 months, and you can register at the beginning of every month. The cost for certificate courses is 500 euros, while diploma courses cost 800 euros. Take action and register today. For more information, contact info@strategiabusiness.com or visit www.strategiabusiness.com. It's no secret that Africa is the next frontier, and you can be the next big investor. At Strategia Business School, we'll offer you a monthly masterclass that will help you build your network among respected entrepreneurs and business leaders and guide you on the opportunities available and how to mitigate any challenges of investing in Africa. Our African Business Club will also introduce you to our team of African business mentors and fellow investors, all tailored to your very own needs. Among the modules covered are doing business in Africa, raising investment and trade finance, importing from Africa and exporting to Africa, agribusiness opportunities in Africa, and understanding the African market. You can also register for online diploma business courses with a flexible learning schedule. Some of our courses include Diploma in Digital Marketing, Diploma in Sales and Marketing, Diploma in Finance Management, and Diploma in Logistics Management. Certificate courses run for 3 months, while diploma courses run for 6 months, and you can register at the beginning of every month. The cost for certificate courses is 500 euros, while diploma courses cost 800 euros. Take action and register today. For more information, contact info@strategiabusiness.com or visit www.strategiabusiness.com.
An interesting 2 hours where we'll go through each one of them to tell us what it is that they can do for you as an investor who's looking to take advantage of opportunities in Africa. And also we will be talking to you as African business people who are saying, I want to take my business to the next level. What do I need to do in order for me to do that? So I want to go ahead and just start off with something that I know we have a lot of African businesses who are really early stage, right? So you have a great idea, you have just started out, and of course, a lot of people say the problem is access to finance. I say that really isn't the problem. Usually it's, do you have the capacity to take advantage of the market? Do you have the capacity to actually do the right business? But yes, finance is actually also a problem for early stage. So today I want to welcome Jason Musyoka. I believe I see him right there. And Jason is actually with the Angel Network. He's an Angel Network manager at the Victoria Ventures. Now, Jason today will be telling us what it is that they do at the network, because like I said, we have very many Africans who have this entrepreneurial spirit. Not everyone wants to be employed, but again, they're saying, look, I'm very early stage, I need seed capital. What should I do? Where should I go? And so today we'll be having Jason share with us what it is that they do to support. And Jason, what I really would like you to do is talk to all the business people here to tell them What is it that they need to do to position themselves in order for them to get the first initial seed capital from an angel investor? What are the angel investors looking for? Because I believe that's very critical, and that's where a lot of us in Africa are missing the point. So welcome, Jason, to the Invest in Africa Symposium, and we can't wait to hear what it is that you're doing at the network. Welcome.
Thank you, Anne, for that introduction. And it's a pleasure to be here, and also at the same time looking forward to the other panelists and getting to hear their views about how they look at investment and financing in Africa, across Africa. So just to be brief, because I know I don't have the whole, so that I can be fair on it from a timing point of view, I'm just going to give you a brief overview of what VBAN does and how we hope to change the narrative with regards to access to capital, and especially early stage funding. So Victoria Business Angel Network is a network of angel investors. By and large, these are a group of angel investors that come together and they say they want to explore the early stage opportunities and try to see how they can channel capital, and just more than just the capital, also provide a bit of value addition from a personal perspective into the businesses that they make an investment in. So by having said that, we are quite sector agnostic, and they look at anything from technology-enabled businesses to logistic businesses to companies that are trying to do a bit of renewable energy, and even to health tech businesses. So we really do cut across everything that is perhaps being offered as an investment opportunity, and by and large, we tend to be the first institutional investors the companies are quite interacting with. And the process of investment is similar to what you might see from other venture capital associations, whereby you get an opportunity, you have a couple of conversations with the entrepreneur, you undertake a bit of due diligence, and then on that basis, you determine the structure of investment that you want to progress with. So we largely do equity-based investments, but we are quite open to other innovative ways of deal structuring. So we can do a bit of debt. So we have done a couple of straight debt investments. We have done a bit of convertible notes. This is capital that is first given to you as a loan, but then eventually there's an option for the investor to convert it into equity. But also we have also tried to look at other ways in which you can structure an investment, of course, within the context of an enterprise. So there are other things like revenue-based arrangements that we have with some entrepreneurs that we have already provided funding for. And I think the more you open yourself up to any kind of investment instrument, then that's perhaps one of the ways in which you can find investors that are willing to explore different mechanisms in which they can provide capital to you. If you cannot support debt, perhaps then it will be easy for you. Those are some of the ways in which we ourselves, and I think most investors or early stage investors, are trying to see how they can use different instruments to provide or channel capital to early stage founders. So for ticket-wise, the range in which we invest as Victoria ranges between $50,000, that is syndicated capital of $50,000, to all the way to $300,000. And I think that quite indicates that we fall in the very early stage bracket of the ecosystem. So at the moment, we are focusing on the Eastern African region, but we are yet to make any active investments in Uganda and Tanzania. So most of the portfolio is concentrated in Kenya, but we have a company within our portfolio that also has operations in Ghana and Nigeria. So it doesn't stop us from looking at companies that are looking to scale Pan-African wise. Yes, so the way we see positioning by entrepreneurs when they are looking for funding from us is there are 4 critical things that we evaluate that I think are necessary and are quite relevant for early stage investing. Given the state of the business, of course, there's not really much that you can sink your teeth into. So by and large, you're really supporting the team, or you're really backing the founder is what they refer to as back in the jockey as opposed to the horse. So we look at the team, we do a bit of diligence in the team to see how the capabilities within which they have internally, or if there are gaps within the team that will make it very difficult for them to execute on strategy. I think that's the first thing that we really look at and focus on as well. Other things have to do with some of the financial metrics, or even if they don't have metrics, how they have analyzed the commercial opportunity, and if there is any innovation around what they're doing to make sure that they can get a bit of market share once they launch the product into the market, or once they start targeting the market that they're keen on. So those are the things, those are some of the ways that I think entrepreneurs, once they focus on those interest areas of commercial, team element, and if there's some bit of traction which indicates or signifies that there is presence of a market in what they're trying to do, then they should use that data or that information and present it to investors like ourselves, and also early stage investors to seek out funding from them. Yeah. So I don't know,
right.
maybe if you have a specific question, I can respond to that.
Jason, you keep freezing.
Sorry.
I don't know if it's me, but Jason keeps freezing a little bit.
Yes, I can hear you properly.
Okay, great. Okay, continue.
No, I was asking if, I don't know if there's any questions thus far, or I should maybe dig into another aspect of the network.
Yes, I think you've covered a lot. I haven't seen any questions in the chat, but I think what would be great for people on the attendees to know is, one, we have very many investors who are from Europe and they're looking for opportunities in Africa. They might not necessarily want to find the opportunities themselves. Maybe they might say they want to be angel investors. How do they be part of your network if they are investors outside Africa? Second of all, you mentioned, for example, that you're looking at early stage investors, and minimum is $50,000, which is about 5 million if you're here in Kenya, and you're backing the founder. But we find sometimes people are just really in their first year of business. So when you're talking about being part of your network, how does someone join in your network? And before they get funding, how long do they have to be in business? Do they have to have profit, or do they just have to be generating revenue? If you could sort of elaborate more on those two things around the investor and also the business to be investor ready, what do they need to do? That would really greatly help the conversation.
Sorry, do you mind repeating that one? I think I lost you at some point.
Okay, in a nutshell, just the first question was, how do you become an angel investor, right? You want to be part of the network and you want to be an angel investor. How do you do that? The second question was, I am an entrepreneur in Africa. I am ready to, I think I want an angel investor to come in as the first investor into my business. So the question would be, what should I be doing? Do I actually have to have profit? Do I just have to be generating revenue? Do I just have to have an idea? Where do I have to be in order for an angel investor to look at my business?
Maybe you repeat the second part of the question. I think the first one was, how do external investors become part of the network as they're exploring early stage opportunities here? And then the second one will be,
yes, so the second question was, I am.
Second part of the question is what I didn't get.
Sorry, okay, I'll repeat that. So the second question was, I'm an entrepreneur in Africa. I would like to get an angel investor into my business. What do I need to have? Do I just need to have an idea? Do I need to be profitable? Do I just need to have been generating revenue? How long do I have to be in business? So if you could answer that, that would greatly give clarity around angel investing.
Great, no problem at all. So The first part of the question is how do foreign investors, if someone, let's say, perhaps is in Europe or America, then they're looking to take advantage of the emerging market from an investment interest. So our network really is by and large, it's registration based, of course, and on that basis, people can register to be part of the network. And what that really explores, it opens up for them an avenue in which they can look at curated opportunities. By curated opportunities, I mean companies that you have looked at and we think they're investable or they can be considered for an investment. But over and above just the deal pipeline elements, there is the larger and more important one of networking with other similar and like-minded local angel investors, and just learning to see how the investment journey has been from a local context. I think that's really drives a lot of value to people that are trying to explore the African market, having that, given the fact that they are not here, they can take advantage and network with angel investors who have boots on ground, as you can say, and quite understand the commercial outlook of the region that we are based in. So that's and a bit of capacity building that they will also get advantage. They'll also take advantage of while they're in the network, just to learn about what are the nuances of investing in early stage in Africa as opposed to investing in early stage in Europe. So I think, so having said that, the way in which we can collaborate with interested angel investors from outside is through by them becoming part of the network, and then they can start taking advantage of these value adds that are within the network itself. Now, as an early stage entrepreneur looking to or seeking for funding from our network or from any other early stage investor, the criteria differs from one investor to another. Some might overlook some elements of the business, others might not overlook some elements of the business. But for us, we try to stick to companies that have a bit of traction, because then that's an indication of commercial potential, and they have a very solid team internally that can be able to execute on strategy and go to market. And lastly, we try to see how they can, if besides the traction and the team, we also try to see what is the innovation around what they are offering. And innovation does not need to be anything novel. It just needs to be something that they have understood that creates efficiencies in the sector that they're offering. So what is the unique selling or value proposition that they're presenting to the market, which will display of itself, of course, in a bit of the traction and the commercial potential. Sorry?
Sorry about that. If you are not a speaker, could you please be on mute, and could you please remove your video so that we can just have the speaker on video, and also please be on mute so that we can make sure that we hear every speaker. And also I would like to say, I do see a few hands raised. We are gonna be getting questions for the panelists. So in the meantime, just write the questions on the chat. But if you'd like to actually ask a question, then we'll be asking it towards the end of the symposium. So I'd really appreciate you being on mute, and please put your video off. Thank you. Go ahead, Jason. Sorry about that interruption.
And no worries at all. So I would say those are the three things that we are quite keen in. That is the team element, the innovation element. I mean, what is the value proposition that you're offering from a product or service provision point of view, and a bit of the traction, just to give us an indication of the viability, the commercial viability of what you're presenting for investment.
All right. Thank you for giving us clarity, Jason, about the Angel Investing Network. You mentioned definitely commercial potential is very, very important. So anyone who's going into business wants to make sure, or anyone investing in any business wants to make sure there's commercial potential. And the team is very critical, because at the very beginning, you're backing the entrepreneur and the team, and can they execute strategy. There are a few questions coming in. Really, the main thing is around the sectors. Earlier, you mentioned that it's sector agnostic, but can you clarify that? What do you think are the actual sectors that most angel investors in your network are looking for?
Sorry, what? I'm not sure if I'm the one who froze there, but you're talking about the sector.
About sectors.
Yes. Yes. So by and large, I think we are very sector agnostic, but of course, we have some bit of limitations into the sectors that we can look at. Like, for instance, we might not be open to mining opportunities or ammunition opportunities. So some sectors we try to shy away from them because those are quite, or infrastructure-based investments, we try to shy away from that. So you're largely looking at something that there is a bit of conventional industry structure into them. And by that, and maybe they have a bit of technology that is enabling to creating efficiencies within the sector itself. So we are looking at quite conventional industries and sectors that have a bit of relevance, and they can offer an early stage investor an opportunity to make some bit of return. So this can range anything from agriculture to logistics to retail to hospitality, but a bit, or even insurance itself. So we do open ourselves to a variety of sectors. Of course, and within the current circumstance whereby some industries are impacted a lot by COVID, we have also gone a bit slow. Opportunities coming from those sectors, but once they opens up, of course, we'll jump right ahead and start looking at opportunities coming from the sectors that had a bit of a slow growth during this period.
Sorry about that. It looks like internet is a problem today. But what I was saying, I'm very glad to hear that there are very many sectors that your network is interested in, because most times people think about, if I'm needing an angel investor, I need to be in tech. But it's good to hear that you could be in agribusiness, you could be in logistics, you could be in travel, you could be in any industry that an angel investor thinks they can actually make money, and they will back you if they think you have the ability to execute and they can get a good return on investment. So thank you, Jason, for your clarity about what it is that your network does. And I believe there'll be more and more questions that will be coming in. So I would like to now go on to Njuki. Njuki is an investment manager at the DOB Equity. We've just talked to Jason about angel investing, but also one of the things that a lot of people have been asking questions is, I need patient capital. And so when you think about patient capital, you think about equity investors who are putting money in your business, and then their need for the long run. So Njuki, are you in? I don't see your video. If you can put your video
Yes,
on.
I am here.
Okay.
Unfortunately, the host has disabled my video, so I'll ask him or her to re-enable it.
Okay. So the Invest in Africa team, could you please enable the video for Njuki of DOB Equity so that she can be able to share with us? So thank you, Anne, for joining us today. And we really would like to get your insights about what it is that you're doing at DOB as an alternative funding option, because most people in Africa know that if I need money, I want to go into the banks. We've just talked about an angel, we've just talked about angel investing. For you guys, it's more of, your equity investors, you want more of an established business. Could you just give us a bit of a background about what it is that DOB is doing, what regions you're focusing on, what it is that you think needs to be done by businesses so that they can prepare for you and your team to actually put money in the business? I keep telling people that there are funds like yours. People actually have money and they're looking for good businesses, and it's hard to find. So what is it that you would like to tell us about DOB, and why should people be knocking at your door? But please make sure you're ready before you reach out to Anne. So welcome, Anne. Tell us more about what you're doing in regards to funding.
Wonderful. Thank you for that warm introduction, Anne. So as Anne has mentioned, my name is, interestingly, also Anne, and I work with DOB Equity. So I'll do two things. I think one is I'll explain a little about DOB, and then I'll follow that up with a bit more general about the type of funding that we do. That's really more geared towards, I'd say, educating the audience and raising awareness about the types of capital that are out there. So DOB Equity is a Dutch family-backed impact fund, and we invest in social entrepreneurs across East Africa. So we invest in Kenya, Uganda, Rwanda, Tanzania. We've also had investments in Burundi in the past, but we have investments in each of these countries, and our portfolio has 23 companies total. So as an equity investor, we buy shares in the company. So we would put money in the company and expect a certain percentage of the company back in return. We typically will invest in fairly early stage. So this would be, for example, after Jason from Victoria Business Angel Networks comes in. And for us, our typical investment size is anything from $250,000 up to $1 million for an initial check. And from there, we are happy to participate in follow-on rounds of funding up to $5 million per company. We are a minority investor, so we'll invest anywhere between, for anywhere between, say, 10 and 49% to the business. The reason being, given how early we come in, we want the entrepreneurs to still own the business and still have skin in the game. But obviously knowing very well that while we want you, the entrepreneur, to own the business, we also want, as an active investor, to have some say in the company. And that's typically, for example, sitting on the board and being able to at least have some influence in how some of the business decisions are made by the company. We are also sector agnostic, so we'll invest really in any sector where we see impact, because we're an impact investor. But we also would like to see commercial level returns. I know this question might come up, so we're sector agnostic, but what does that really mean? So we're looking for really 4 things. And this might sound a bit repetitive from what Jason said, because it's very similar to what we're looking for. One is we want to back a strong team that is solving an important problem with a sizable market, with a scalable and innovative business model. So, one is the team. That's extremely important because circumstances change, the business pivots, but reality is we want to be able to back the jockey, again, as Jason said. And even if the business pivots in different directions, I think what's important is that they're focused, they can attack any problem that comes their way. And these are usually very unpredictable. The types of issues may come up. 2, there needs to be a significant problem that they're solving. So for example, are you improving market access for farmers? Are you enabling people to travel safely? Are you reducing pollution in the environment? So it really needs to be a scalable, a very important problem with a sizable market. So can your business scale beyond, say, Kenya, which is where we are based, to other countries in Africa? If you're really building a business that can really only scale in one market, then that's typically not, of interest to most, early stage investors. And I'll go into that into a minute. And it really needs to be, a very innovative business model with positive financials. So we want to see positive unit economics. We want to see some traction. Your business does not need to be profitable. That's not important, but you need to show some revenue. You need to show that you have customers. You need to show that the marginal cost of an incremental customer is worth the extra business you're providing to them. So for example, we might look at metrics like your customer acquisition cost and compare that with your lifetime value of a customer. So if it costs you $100 to acquire a customer, but over 5 years, you're only getting $90 of value from that customer, then we might not consider that, because then you're probably, it's probably not a scalable business model. So that's really a little bit about DOB. But let me take a step back and explain a little bit about the type of funding that we provide, because it's quite similar to what Jason mentioned. So there are typically 2 tracks of financing that businesses use to grow and to expand. I'd say the first one is, and these are general buckets. I'd say the first one is debt, and then the second one is equity. And debt includes, working capital from banks. It includes invoice factoring, includes, trade finance, includes, straight debt for assets, right? So that's typically what we call debt. Then on the other hand, you have equity, which is, and debt will have, like a fixed repayment schedule. Sometimes you'll have assets attached to that, and is typically a recurring cash flow, one-time or recurring cash flow that comes out of the business. And then on the other hand, you have equity, where will give you as a business money, and in return for those funds, then we get a share of the business. So we could say, I'll give you $1 million for 10% of your business, which effectively values your business at $10 million. And we will, for example, as DOB, stay on in the company for many years. It could be 7 to 10 years, for example, with the expectation that after 10 years, we will exit the company by selling our shares. We could sell our shares back to you as the entrepreneur. We could sell to another investor. We could sell to another company that's interested in shares in the shares. This is usually a great arrangement for early stage companies that don't have the cash flow to be able to pay back debt, and also are a bit more longer term focused with regards to where they are, but they need money now, and debt doesn't make sense. And there are typically some variations of equity and quasi-equity that are available. But the main idea is we give you money. We don't expect the money back from you in most arrangements for many years, could be 10 years. Then there are different stages then of equity. So typically you'll come in, you find people like Jason coming in as angel investors, and then early stage investors like DOB, followed by later stage investors. You've likely heard of private equity funds. They'll also come in at different levels of growth and profitability of the business. If an angel investor might come in when you have an idea and 10 customers, then an early stage investor like DOB comes in when you have more revenue, your 10 customers have grown to maybe 1,000 customers, and then a private, and you have your revenue, but you're still losing money. And then you see private equity investors then come in, much later down the road when you have revenue, you're profitable, and you want to scale. So you'll see a lot of family-owned businesses really take private equity funding when they've grown, they have positive revenue, they are positive cash flows, and let's say they want to expand from Kenya to Ethiopia or to Nigeria, and just don't think it makes sense to take debt. Then they'll take on equity funding, even when they're large and profitable. I think in the news this week, there was an announcement that ETG, Export Trading Group, is taking in $100 million from CDC. So that's much, much larger private equity, whereas, with early stage funding, we're talking about $1 to $5 million. With angel investing, could be $10,000 to $100,000. So I'll pause there and ask if there are any questions.
All right. Thank you, Anne, for just taking us through the journey. In fact, when you were speaking, I was like, a lot of people really don't understand the stages. It depends on what stage you are in business for you to be able to get the kind of funding that you need. As you rightfully put, Jason came in and said, we are an angel investor network. As we know in the industry of investments, we always say the beginning are the 3 F's: your family, your friends, and what I call fine angels. I know people call them fools, but I say fine angels. Your family, friends, and fine angels are the first people who go into your business, right? And then now once you already start your business, even though you're not profitable, but it looks like it's commercially viable, you have the ability to scale, of course, the angel investors come in, then now that's when you can come to people like DOB Equity, who can then be able to now take you to the next level. As Anne rightfully put it, they could be in your business for like 10 years. This is patient capital that you don't have to pay back. With banks, they give you the money, and every month you have to pay them interest plus the money you borrowed. But with an equity investor, that doesn't happen, but they require you to do certain things. For a lot of you, like she mentioned, they want a stake in the game, so they will need shares in your business. They want to be on your board, which means, and I keep telling this to all African business people, start your business right? Start your business right. Have the right structure so that if you want to get money from, say, DOB Equity, you already have, for example, a limited liability company so that then they can come and take in shares. But if you have a business name, like how are they supposed to do that? also you need to already have started actually having governance in, maybe even have a board of advisors, and then eventually you grow into board of directors. But again, what I believe DOB does is they walk you through that. Now, Anna was looking at the questions. I do see different people. Actually, we have people from South Africa, from Somalia here, and they are really asking, they're just pretty much saying, let me see, there's a question here about plans to invest in Malawi. I know you're in East Africa, you didn't mention Malawi. Are you planning to ever expand outside East Africa? Maybe that's the question that the lady Selina had.
Yeah, so not at this point. So our mandate is purely in East Africa, which is Kenya, Uganda, Rwanda, Tanzania. I believe, however, there are other impact funds that invest in Malawi. I believe Goodwill invests in Malawi, perhaps AHL Ventures might also invest in Malawi, so certainly worth looking into them.
Okay, thank you, Anne, for that clarity. So Selina, not every fund will be able to fund you based on the location, based on the industry you are in, maybe based on the deal size. So when you're looking for funding, I always tell people you want to actually do research. Who is available in your region? Who is interested in your industry? Those are some of the things you need to look at so that you are not going to DOB asking for funding and you're based in a region that they don't support. But then another question I have here for you, Anne, maybe you can just clarify. There's a lady from Kenya, and she actually has a microcredit business, and she says it's picking well, and she would like to know about funding, and because she says there's demand, and there's demand by SMEs. So in a situation like this where she has a microcredit, are you interested in the financial service industry? What is it that she would need to do so that then DOB can be able to look at a company like hers?
Yeah, so that's a good question. I would say that we are always open to speaking to new businesses in any sector. I think what's important, I think unfortunately the one exception is that we do not look into personal lending businesses. However, we will look, for example, into businesses that are providing credit for SMEs if we believe they are if the business lending is a strong enabler. So again, if you meet some of the criteria we talked about, so strong unit economics, there's something innovative in what you're doing. So you're not just like any other microcredit company, and you have a scalable business model. So for example, you're seeing a lot of banks today, when they expand, are not really building brick and mortar branches, but they're using digital banks and digital channels to be able to expand. So you're really doing something that is a very scalable business model.
Okay, so thank you, Anne, for that clarification. So as you had the other Anne from Kenya, they're interested in financial services, but what she said, personal lending is not something they're looking for. They're more interested if you're lending to businesses. So I'm not too sure what your business model is, but if you are in the business section lending, then it's something you can reach out to DOB. If you are on the personal lending, then there are other people, other funds that are probably interested in that. So that would be maybe a better fit. So it's about doing research or actually working with advisors like us at Regal Africa, which is the company I run, which would then look into our network to see what is the best fit for you and your business, depending on what stage you're in, depending on what industry, depending on your business model, so that then you can approach the right people and you will have a yes rather than a no most of the time. So thank you very much for sharing with us what it is that you do at DOB. I know more questions will come in, but then now I'd like to go ahead to our next speaker.
Thank you.
Who is Mr. J.C. Shukla. He is from India. Mr. Shukla, I see you. Okay, thank you again for joining us again at this Invest in Africa Symposium. And today we are talking about raising investments and trade finance. We've just talked to Jason, who's told us about angel investing. We've talked to Njuki of DOB. She's told us about equity investing for more businesses that have grown. But for you, you're coming from India. You've seen opportunities in Africa. We're having the discussion about the big four projects in Kenya and about affordable housing. And housing is a problem all over Africa. But you know that there are different funders around the world who are interested in this very capital intensive industry. Could you shed light on that around people who have larger projects, capital intensive, what it is that they need to do and what it is that you would do at your company to assist them to get the right kind of funding? Because in this case, they're not SMEs. They are actually project-based funding, and you know, it's really going to have impact. So if you could let us know what it is that you're doing and what it is they can do to make sure they access the right kind of investors, would really appreciate that. Thank you.
Thank you, Anne, and thank you, John, and thanks all my co-speakers. I am once again glad to be here. All my my American friends talk about Africa, and which pains me, but what they say is this, that Africa is a rich continent where poor people live. You know Africa has huge opportunity, and you are all sitting on gold. Now, what are the challenges and how to overcome? I'll try to give some solutions rather than the problem. Today, we are talking mainly about funding. I will not repeat what my earlier speakers have said, but I'm going to talk about different kind of funding. Well, one thing is that I'll take a little traditional funding first. Government of India has an Exim Bank of India, which gives line of credit. This is a very fine financial instrument for all developing countries. And believe you me, all countries in Africa, all projects, and all of you can avail this money. And it can be less than $1 million to more than $1,000 million. And beauty of this financial instrument is payable when able. What does that mean? You take the loan at very low interest, maybe a couple of 2% per annum, run the business, make profit for 10, 15 years, and pay it after 10 years or 15 years. This is a long-term credit given to you. You can rotate your funds 3-4 times. It is the treaty between Government of India and each of African countries. The understanding is this: Government of India lends money and borrower country takes the risk. All details are available on the website of Exim Bank of India. Please go to the line of credit and go to the chart of existing LOC, existing line of credit, and you will be surprised. There is more than $2,000 million lines of credit being disbursed. If I give you the statistics, in 2017, $8 billion were disbursed in 44 countries. It operates, basically, the Government of India and this line of credit operates through designated local bank. Like in Kenya, there is a PTI bank. I had been to PTI bank, and they will guide you. If at all you go and ask for the line of credit from India, they will guide you. Only condition is that the imports should be from India. And this Exim Bank has offices in Johannesburg, Addis Ababa, Abidjan, and also they operate through local banks like Afrixim Bank, Indo-Zambia Bank, ECOWAS Bank, PTA Bank, West African Development Bank, Nigerian Export-Import Bank. So virtually each country of Africa and all kinds of projects, small and big, are catered to. This will be a very good financial instrument for all developing countries. I request you to look into this, and if there are any challenges and if you have problems, you can approach us or write to us. The other one which I would like to touch base is the USA funds. I am on the board of an American company called Orthron Development Corporation, and we entered Africa almost 10 years back. I went to the finance minister and Prime Minister Oding at that time, and what was our tagline? Give us land and we give you back cities. The minister said, it is too good to believe. And I said, sir, don't believe. To cut the matter short, Government of Kenya sent 6 people for due diligence to America. They went to OP, Goldman Sachs, World Bank, and everybody said, we will fund this company. Again, we entered into joint venture with parasitic government body called Lake Basin Development Authority of Kisumu. We created a joint venture where they agreed to commit 3,000 acres land for us to create cities. Very unfortunately, by the time we signed the joint agreement, the government had changed. And you know African story. Here is the big challenge. The Africa is full of opportunities, but the challenge is poor governance and rampant corruption. And we are victim of it. However, we have not lost hopes. Again, new government has invited us, and we are negotiating 2,000 houses. And we are with a private agency, private company in Kenya, building up another 5,000 houses. And this is how we somehow or other want to enter the business. What I want to mention is that American pension fund is earmarked for African development. And money is available virtual and asking. We have created the channel for this. Unfortunately, we could not use it so far. Now I'm hopeful soon we'll be able to make use of it. These are the standard business funding model. I'll call them traditional model. But there are a lot of SMEs I am seeing, lot of small businesses I am seeing in Africa and also represented here. I request them that funding need not be by hard cash. Look at the new business model. Try to find out how you can reorient your business. You may not need funding. I'll give you a few examples. There is a last seminar I mentioned about the freerice.com, where people feed hungry people free of cost and make money. And Kiva model is already known. It is a public funding. Kiva model is very, very popular world over. It's cloud funding. Azuri is another model, pay as per use solar system. This is operational in Africa. Simbi.com is a barter bank model, which is also very functional, very successful. Another one is I'm talking to a Cameroon girl. She's having an insurance business and she's a broker. What I said that please study the model of Friendsurance, Friendsurance, Friendsurance. Now here you can virtually give 50% discount for the premium and make double the profit. And this is a model in operation. This is how new model, I think, new small and big businesses should start looking into it. There are another model I would love to talk about is there is a 3D printing model and Wi-Fi model. Now somebody found out the spare capacity of 3D printing in a country and created a model like Ola or Uber. I do not know what do you call it in Africa. In Kenya, Ola is not there. I think Uber is there. This kind of share model like Uber, you can create for 3D printing. You can create for Wi-Fi also. Another new, very creative model I want to talk about is newspaper supplier. One newspaper manufacturer came to us and said that he converted his supplier, printing ink supplier, as a partner, and he pays him per copy. He doesn't pay as a supplier. He pays per copy printed. That has saved his huge costs, reduced waste. So this kind of model should all the businesses should look into it, and they are available in plenty on the internet. And look at our blood model. We are already implementing in Kenya, and we are invited by government of Kenya to implement it to make it universal healthcare. What we are saying is that anybody who gives the blood donation once, we will pay health insurance premium. So that solves the problem of raising the blood donation and also premium, the health insurance both. Currently, health insurance premium, half the people in Kenya are not paying. So we told the government that we'll pay them. This is our own innovation. And I would request you to copy it. We do not believe in copyright. We believe in copyleft. Please copy this model in each country of Africa, because in COVID times, blood is the biggest shortage and people are dying because of blood. And if you need any help, we can help you how you can implement this model. However, these are a number of things we can keep, I can keep talking, and very short time is available. So since last time of my seminar, I got a lot of experience. They need more one-on-one, they need more hand-holding. So I talked to John, and fortunately John has agreed. I will give a free master class for all this model. And I request whosoever is interested, approach Strategia Business School. They will charge some nominal, and we can also have one-on-one starting from June. I think this should be interesting enough for all. Over to Anne. Thank you very much.
All right, thank you, Mr. Shukla. I know it's music to many people's ear when you talk about a free masterclass to teach them how to get this different investments. Innovative in Africa, we've learned to be very innovative. We've learned that things don't come as easy, so you actually have to be very innovative. So for all of you, you understand information is actually the beginning for you to be able to become successful. So I would encourage all of you to take advantage of that. Reach out to the Invest in Africa team, and they'll give you more information about how you can actually join the masterclass that Mr. Shukla is actually offering to give you information about that. I think for me, I see a few questions here, Mr. Shukla. You mentioned about the line of credit. From the Exim Bank of India and the Indian government. I wasn't sure if it was the same, but the question here is the lending only to governments or is the lending to private companies? That is the question that we have here because people needed some clarity. Okay.
They're lending both. There is also a buyer's credit. If a buyer is credible, he can approach independently. There's also a buyer credit available for the large and small projects. And if you approach through bank, if you approach through government, it will be easier for you to get it. But if you are independent company with a large project, based on your credential, they lend it to everybody and anybody.
Okay, so it's always good to be a bit practical. So I have a question. I see a German man here from Somalia. So if Somalia wants to build a port, right? They have a very long, and they want to build a port, and they want to get a line of credit from India. How do they do that? Because you mentioned that they need to import the things from India. That is sort of the basis for India to lend to them. So how does that look like if somebody wants to, practically, if somebody wants to actually get funding, and how do they do that? I want to build a port, or I want to build a factory in Nigeria, and I want to process the food there.
Yeah,
How do I do that?
Now, let me first talk about the port in Somalia. I think Somalia is a part of the East African country, and the PTA Bank should be the nodal agency. There, if you go to the website, they mention whom to approach, or best could be you can write to Exim Bank India, or you can go to PTA Bank and say that here is a project. They will vet the project and make a proposal. On the website, based on the country and the available nearest available nodal agency, they have already mentioned. If you have any problem, you can write to me, or you can write to Exim Bank of India directly. Yes, this kind of projects they have already funded.
Okay. Okay, thank you for that clarity. Just so that before we go to the next speaker, you mentioned about US pension funds. You mentioned about there have been opportunities that have come to Africa whereby the African governments just need to give land and then new modern cities, smart cities are built. But the issue is, you mentioned, is governance and corruption. From where you stand when we're talking from an investment perspective.
I lost your voice in between.
I'm sorry. Let me repeat that. I mentioned you mentioned that there have been opportunities in Africa. And I always say for people who, you cannot hear me. Can you hear me now?
Now, yes.
Okay, I apologize. I'm not too sure why. My question was, like you mentioned, there are various opportunities in Africa, and anyone who's not investing in Africa is missing out. You gave an example of whereby there are projects that have been identified in order to build smart cities, right? But they did not go through because the government, something happened. Either the government changed. Can you hear me now?
Yeah.
Yes. So can you clarify that? For example, I am in DRC. I want that to happen. Does it have to go through government, or can you actually do a PPP project, or do I have to come in as a private citizen with my land and now say, do a project? Because what we want is we want solutions. If it's not going through the government, is there any way that private citizens can actually access these opportunities so that we're building modern cities and creating opportunities for others?
Actually, I did mention that since government took such a long time negotiate with a private agency we called NEMA Trust in Nairobi, Kenya, and we are in the final stages of signing an agreement with NEMA Trust for 2,000 houses for government civil servant. Almost 90,000 of them are waiting for the housing. And again, these funds are going to come from USA. I am on the board of an USA company, and I am in the final stages of signing the agreement.
Great. I am glad to hear
this
that.
This is a private trust, and the private agency is only land deal and also another set of affordable housing project. But this is for the private. Any private C.E.O or cooperatives can come to us with the land, and we'll organize funds from US.
Okay. Thank you very much, Mr. Shukia, for clarifying that. So as the person had asked questions, it's both government project, private sector project. There is money there, but you need to have a bankable and investable project so that then you can find the right investors who have the investment appetite or the risk appetite for them to take advantage of this opportunity. So thank you, Mr. Shukia, for your time. We'll continue getting more questions and we'll reach out to you for more clarification. But remember, there is a masterclass that is being arranged, and it is free for everyone who's joined us here. So please take advantage of that so that you can get the right information about innovative ways of funding your businesses and your projects. Thank you very much, Mr. Shukia. So I will now go ahead and call on Victorine of Strategia Business School. Earlier we saw a video. We saw a video telling us about the masterclass coming in. I know a lot of the audience would like more information about that because I keep telling people knowledge is power. We need the right information. And of course, a lot of us in Africa have been taught that when you're doing a business, you just start it. But you are telling us at Strategia Business School that there is more information that you need if you want to invest in Africa in order for you to identify the opportunities and also for people to take the right classes so that they can be able to actually get jobs and create great businesses. So Victorine, I'll give you a few minutes for you to just take us through what it is that you're offering at Strategia Business School so that then now we can go on to the next panelist to share with us more about trade finance and raising investments in Africa. So go ahead, Victorine, let us know more information.
Okay, thank you, Anne. Thank you, everyone. I don't know if the technical team can allow me to share my screen. Yeah, can everyone see it?
Yes, we can see your screen, Victorine.
Okay, so my name is Victorine, as Anne has mentioned. I am the training manager for Strategia Business School, and I've seen quite a lot of questions in the chat box about the masterclass, so I'm going to tell you quite a bit about this. So Strategia Business School is an international training organization based in the Netherlands, and we offer different business courses and advanced training and capacity building to different people and different professions. We have two main products, the Africa Business Academy and the Global Business Academy. The masterclass that everyone seems to be quite interested about is focused on investing and doing business in Africa. We have partnered with Invest in Africa to offer this masterclass that ideally provides training and guidance needed to do business in Africa. The way the program is structured is we have selected the topics very, very carefully to ensure that we cover the procedures, the guidelines, the different opportunities that you could have in doing doing business in Africa. Whether you are an African yourself, whether you're an African in the diaspora, or you're an investor looking to invest in Africa, this masterclass would ideally work for you. Now, some of the topics to be discussed in this masterclass are, we've seen one today, raising investment and trade finance. We also have doing business in Africa, just general overview of what it takes to actually be successful in doing business in Africa. Importing to Africa, importing out of Africa, the different agribusiness opportunities, the Africa Continental Free Trade Area, understanding the African market. So ideally, this class is to kind of give you the knowledge and the insights you would need, practical information to maneuver in this African market. The sessions would be done similar to what we're doing now, where we'll have an array of different expert speakers, government ministries, investment companies, not just from Africa, but from North America and Europe as well. Now, in line with the topic today, we also have an inventory or sort of directory of over 3,000 investors that would be given at the end of this session to kind of just push you in the right direction, especially if you're looking in trying to get investment and funding for your business. For those that are interested, the masterclass starts on the 1st of this coming month, that is the 1st of June, and it runs for 8 weeks. So every week we have a weekly session covering a different topics and goes for roughly 2 to 3 hours. The cost of this is 499 euros, but for the participants in this webinar, or if you've participated in any of the webinars before, we're having a 20% discount. So if you're interested in this, just send us an email to masterclass@strategiabusiness.com. I've seen quite a lot of people asking about how to get in touch with us. Just drop an email to that email address and we'll be able to kind of guide you in the process coming up. As I mentioned earlier, we do the academic part, but we also have a number of different online business courses. And they're kind of broken down into 3 main areas: certificates, diplomas, and postgraduate diplomas. The certificates go for 3 months at 500 euros. The diplomas go for 6 months at 800 euros. And the postgraduate diplomas go for 1 year at 1,200 euros. Now, the mode of delivery for this is online, e-learning, similar to what is going on now, and they're very self-paced. I've mentioned some of the courses here, but the reason that this could link to the investment in Africa, we've heard quite a bit about investing, and some of the way of approaching these investors, you need to make sure that your house is in order, out of lack of a better word. So we do quite a bit of proposal writing, how do you structure your business in a way that is attractive to these investors? What level of innovation would you have to ensure that you differentiate yourself a bit from the competition coming in? So the business courses are separate from the masterclass, but they also guide. So if you feel like you know a bit and you'd like specific guidance on a specific topic, these are some of the courses we offer. Now, for the business courses, we have a continuous yearly intake the first of every month, And if you're interested in this or you'd like to register, you can just drop an email to info@strategiabusiness.com. Now, special offer for all of the participants. We're having a 20% discount on all our courses. So if you're here, there's a promo code. I don't know if you can see it. Just write us an email, quote this, and then you'd be able to get that 20% discount. I'd also like to mention something Mr. Shukia said. We have been, especially from our last webinar, we saw a lot of interest in this digital sphere or opportunities in the digital space. So we partnered and we will be offering another masterclass starting the 1st of July. That would ideally guide you on this. And the thing with this is that at the end of it, you get a certificate. And then you create a business plan, and then we're able to link you to different venture capitalists. So for those that are interested in this as well, you can just drop an email to either the masterclass email address or the one that's here. If you'd like more information or any more clarity on what I've just talked about, the contact details are on your screen. You can check out our website at strategiabusiness.com. We are also available on WhatsApp. Not everyone is email based. We all have different ways of communicating, but we are available to you in any of these means. WhatsApp, give us a call, let us talk, see what level you're on and what kind of assistance we can give in this venture of trying to do business in Africa. Thank you, Anne. I don't know if there are any questions at this point.
All right. Thank you, Victorine, for just sharing with us what it is about that you're doing at Strategia Business School. There was a bit of clarification, but before I go there, I just want to let all participants know that we'll be able to share the video and also all the presentations to all of you who registered for this event. So you'll be able to get this information. Also, there was a bit of confusion. The free masterclass is what's being offered by Mr. Shukia in regards to innovative ways of investing. That's a very different masterclass than what the Strategia Business School is presenting. This one is a paid course. It's 8 weeks, but they're giving us 20% discounts. So I just wanted to bring that clarity that there are 2 masterclasses being offered, but by different companies. Mr. Shukla's is free, but Strategia Business School, which is more in depth, you need to invest. And they're saying the investment here is 499 euros, but they're giving you a discount of 20%. So Victorine, I think that was it. There was also the issue around the promo code, which I see that you've put right there on the screen. Also, if you could sort of copy and paste it on the chat, that would be great. Plus, everyone, like I mentioned, will be getting the slides. So then you will see the code. But people were asking about the code. That should be it. And I really appreciate this because, you know, it's all about e-learning. I keep telling people, we have people here from South Africa, from the Netherlands, from Somalia, from Nigeria, Malawi, DRC. I mean, all over Africa, all over the world. And we're here getting great information from the experts. And that's the same thing when it comes to e-learning. You can actually do these diploma courses, these master classes online, so you have global education from the comfort of your home and office. So that is really great. But other than that, apart from the code, which was the questions, I don't see any other questions, so any clarification that people need. So again, I would say thank you, Victorine, for sharing with us what it is that you are doing at Strategia Business School, and thank you for the 20% discount.
Thank you.
I know for all business people, I mean, cost is a factor.
Yeah.
And so when people hear discount, they appreciate that. And I know Strategia is all about presenting and giving the right information to business people so that they can take their businesses to the next level. So thank you, Victorine. And
Perfect,
if there are any more questions, I will let you know because we're coming towards, we have about 3 more presenters and then we'll have a Q&A session.
Perfect.
So thank you very much, Victorine. So with that, I would like to go ahead to the next panelist. We have Mr. Kenneth Muchina. He is with the Progressive Insight Consulting. I don't know, Kenneth, are you on the call?
Yes, I am.
Hi, Kenneth. Could you please put your video on?
All right.
Great. So welcome, Kenneth. Kenneth is an investment specialist, and I have known him for a couple of years, and I'm very glad that you're here today to shed light on this conversation we're having around investing, raising investments. We've actually taken the journey where we had angel investor, equity investor, big project. But for you at the Progressive Insight Consulting, you're really now talking to businesses about policy, right? Policy affects the business environment, which is very critical. And especially a lot of business people don't pay too much attention to it, or they don't know what they need to do in order for them to advocate for policy change so that they can do bigger business. So I would like you to just tell us, what is it you're doing at Progressive Insights? What is it that you can do for businesses all over Africa? What region are you working in? And how does this really affect investments in the long run as we scale up our African businesses to do great things on the continent and globally? So welcome, Kenneth, and please shed light on this conversation. Thank you.
Thank you so much, Anne. And I'm grateful to be here this afternoon. We'll go into introducing Progressive Insights Consultants to today's webinar, and also talk about things that you so eloquently mentioned, the place of policy in the world of investment and trade, because it is very important. And even as we talk about accessing investment and trade finance, what I think, or what we strongly think at PIC, is that more often than not, people don't pay enough attention to public policy and how it affects their businesses. So I came across the screen, what you're seeing on the screen, about a couple of weeks back. This is actually the first issue of The Economist magazine for this month. And the article was actually about real estate and the problem with real estate in Africa in terms of incomplete projects. But I loved what I saw here. They claim that the top 10 obstacles to firms in Africa or doing business in sub-Saharan Africa by terms of the number of responses to the questions that were asked in terms of their biggest obstacles or hindrances to business is access to finance. So I asked the question, is this true? I assume it's true because if we deemed it necessary to have a topic about accessing investment and trade finance, there's got to be some truth in what we are seeing here in this particular graph. So who is PIC? Basically, we are a firm that offers policy or think tank and strategic advisory services to leaders and decision makers in both in private sector, civil society, and the space of political governance. We are active in the Eastern African region in about 10 countries, in what you might call the East African community, about 5 or 6 countries now if you include South Sudan. And then in addition to that, you add Ethiopia, Eritrea, Djibouti, and Somalia. So we basically take the geopolitical, security and conflicts, economic, sociocultural, legal, regulatory, and governance issues. We analyze them and we try to package them based on the client or the partner that we are working with, and try to make these make sense to our partners so they're able to make their decisions adequately. So effectively, we've brought in experts in all manner of areas that would be areas that we would need to be able to have access to in order to be able to support people or to support businesses and other enterprises that we work with. It's everything from policy to economics, governance, management, security and conflict management, legal, strategic communications, and political strategy. I think I will not go into dwelling much on what is on the slide that you see currently, in the sense that I have already kind of covered, but when you get the deck of slides, you'll be able to see a lot more detail about how we see ourselves, everything from our mission to vision to our corporate values, and how we do it. Our services as well, I will just mention them very high level. They focus on about 7 or so main areas. That is strategic advice, geopolitical analysis, socio-political analysis, investment advice, macroeconomic analysis, law and regulation analysis, policy advisory, and ICT advisory. The big question to those who are in today's meeting, should policy be of your concern? Or should it be of concern to you and in whatever that you do? I will start by giving a definition of policy the way we look at it, because our interaction with people that we think should be our clients, that we should be working with, it becomes clear that not everyone really understands public policy. But if we put it in fairly, I would say, everyday language, public policy is what government, whether we are talking about that is, and government acts through public officials who might be able to influence or determine public policy. And it could be at the national level. And for countries like Kenya and Nigeria and others who have got government at multiple levels, it could be national level, it could be a subnational, such as a state or county government or local authorities. So what government officials do or do not do about a problem that is brought to them. Yeah, when they consider, or rather when a problem is brought to them by the citizens or residents of a country, that is really public policy. We can analyze it in much more detail to be able to just to show just how much it affects your life. But we are trying to say is that when a government acts or does not act, when you have a problem, it will have a direct bearing on your well-being as a citizen, privately and also in the business that you do. Most governments will provide a structure, either directly or indirectly, that you as a citizen can engage with the government when it comes to policy making. And that is something that you need to know and you need to be aware. Wherever you live, it doesn't matter what your political system is, it doesn't matter how it's structured, there's always a procedure or processes that are given They might be direct, they might be indirect. Direct means you as an individual, you can go and talk to a government official. Indirect means you can go through maybe an elected official or something like that. Like, let's say a member of parliament or a senator or someone like that, or a councillor. Now, we therefore think at PAC that policy basically should be of interest to you, because you need to know what your government intends to do or does not intend to do about a problem that you have. And you need to know how they go about the whole process and where you can be involved or you should be involved, or where you can step in and get your thoughts known. And finally, you need to figure out where and how you can be involved. So pretty much that's what I've just said. And many mechanisms exist depending on what country you live in. So we know what policy is, and we are trying to link policy to investment and trade finance solutions. How do we work that? We first of all think that when you go to looking for financing solutions for your investment projects or for your trade finance, you need to have a number of things that you need to be very clear about. One is what you want to be funded. Do you want to fund your working capital, assuming it's an investment question that we have here? That could also be a trade finance question. Do you want to be funded to put up a factory, which can be a capital expenditure question? You also need to be very clear about how much you want to raise. One of the more frustrating things I've seen in my time in the world of investment finance is people coming in and saying they want finance, but they're not clear how much they are looking for. It usually tells the people you're trying to talk to that you've not thought through what you want. The next thing that you need to be very clear about is the structure of finance that you desire. You might not be an expert, and therefore you might not have refined it the way people like Jason or Anne would define it, but you need to have a clear view as to whether you want debt or you want equity, or a blend of the two, or a mix of the two. That's what I mean. Next, you need to have a fairly good idea of the cost of finance that you can work with, because sometimes you do see entrepreneurs or people looking for money, but they have no idea whether their business can be able to sustain the cost of funding that they are looking or that they're talking about with a particular person they're talking to. Finally, I would say the fifth thing that you really need to be very clear on by the time you go looking for money is the amount of control you're willing to give away. And control, by the way, is you don't want to give away control in the form of giving a share or a stake in your business when you're talking about equity. Sometimes it comes also for debt financing, where there are certain things that you cannot do as long as the debt is outstanding. So for instance, some people will give you debt money and they will tell you, for instance, during the time, for as long as you owe us money, you cannot pay yourself a dividend. So this is what we are talking about when you talk about being aware or being clear about what level amount of control you're willing to cede or give away. Now, if you know those 5 things, the other thing that we need to be aware of when we are going out looking for money is that you need to be talking to the right person. Not all financials are the same. That's what we mean here. And they are different in those 11 or so ways, and there could be others. People, and you had it very clear, Jason, and then moving on to one, some people will fund certain amounts and not others. They will either have a floor or a ceiling. A floor meaning the minimum amount that they will work with, ceiling meaning the maximum amount. You need to be aware of that. It's no use going to someone who will not, you want $1 million, but the person you're talking to cannot give more than $100,000. There's no use of spending your time trying to talk to such a person. Jurisdictions, meaning the countries that people are willing to work with. I think that question came up a bit earlier, I think in the question to, I think it was to Anne, about Malawi. Industries, again, I think Jason, I remember him articulating that about industries that they will not touch. Financing structures, some people are happy with debt, but they will not touch equity, or they will not touch mezzanine, or any of those combinations. Risk and return profile, you need to be aware of this, because some people or some financiers are risk averse in a sense. So there are certain projects or businesses of a certain age that they will not be too keen on touching. And tied to risk will be the return. Return, essentially, I mean, if you're talking about debt, it's the interest rate that they're looking at. If you're talking about equity, it might be the rate of return on the equity that they're looking at. It's good to know what the people you're going to talk to are willing to take or touch vis-a-vis what you're willing to provide or give. The mandates that people will work with, I think GOB, I think they have something about providing or supporting impact investments. So those are the kind of mandates, again, you need to be aware of, because sometimes it can work for you. Sometimes you're better off talking to people who are very clear or who are very specific about working with a kind of mandate which then fits in with maybe your own vision and your mission as a business. There will be certain requirements that people will have of businesses before before financing them, that sometimes don't have anything to do with returns. So for instance, they might be clear that they want you to have not only have a board of directors, but a board of directors that might have a certain nature in terms of constitution. You need to be aware of that. They might insist that you must have a particular element of impact on your community. You need to be aware of that. Control requirements, that's what we spoke about in the slide before, about people might be keen to take a position on the board with a certain number of board seats. You need to be aware of that kind of thing. Maybe you don't intend to have a board of directors, or you don't want to have outsiders, as you may call them, coming into positions where they influence decision making at the board level. Security for their money, I think these we would all understand, especially when it comes to debt. People, different financials will have different requirements. Some will say they will only take, let's say, land and buildings as security. Others are willing to take other forms of security. It's always good to know that vis-a-vis what you can be able to afford. And then there's a question of how, the stage of your business, let's say in the growth curve. Some people will take on early stages, others will say, no, we want a more mature business. And finally, profitability might be a factor to certain financials and not to others. Knowing that, then who is out there that you can talk to when you are looking for your financing, be it for investment purposes or for your trade finance requirements? I have a list of 15. I'm sure there could be more than the 15. Most of them have been mentioned. Maybe just the ones that have so far not been mentioned that I could add is maybe in incubators. Some business incubators do also provide a bit of financing directly. Others will perhaps give you in kind of services, which might be almost as good as cash. The other ones I could mention, perhaps there is sovereign funds, insurance companies. You might not look at them as financials, but especially when it comes to trade finance, there are certain products that they could give you that would be an element of financing your businesses. Not-for-profit organizations, especially those that give grants, business grants, and technical advisor or technical assistance programs. Those again would be places, especially for younger, smaller businesses that have an impact agenda. Those are places I would advise that you look, sometimes for your funding. And again, remember, funding is not necessarily cash or a check. It could be services that you're given that you don't pay for, or cash that you're given that you're not expected to repay at all. So let's basically what we are basically saying here is that let's be open to possibilities when it comes to financing. The last two, you might not think of them that way. Some of you would already perhaps be doing it, but for a lot of other business people, this sometimes comes as a surprise. People that you buy things from, especially when you're buying equipment, when you're buying, when you're in manufacturing, the vendors, this could actually be your financials. You might not look at it that way, but they actually, in some certain businesses, let's say, I would give a good example in retail, or what they call modern trade, basically supermarkets and stuff like that. Supermarkets, more often than not, at least I would use the Kenyan or East African experience, they will buy stuff from hundreds, if not thousands of suppliers on credit, 90 days, 120 days even. but they'll sell these same products for cash. In a sense, those suppliers, those traders and farmers and manufacturers and everyone else is financing this business. So there's nothing immoral or illegal about that. It's something you can look at for your business, but you just need to be aware that it comes with its own restrictions or complications. So for instance, now if you're in Kenya today, you are facing a possible law that demands that you cannot extend trade terms beyond a certain level. But yes, people use vendors to finance their businesses. Customers as well. If you've, for those of you who've been in real estate and a few other businesses where you ask customers for a deposit before you deliver the product or service, essentially you're asking your customer, in that case, to finance your business operations. So that list of 15 should give you a very good insight of places where, if today you're looking for investment or trade finance, places that I would ask you to look at. But as I've kind of hinted as I went through the last 3 slides, including this one, please do your homework before you approach anyone so that you increase your chances of getting a yes to the person that you approach. It would be draining on you. It would be frustrating perhaps to people that you go to meet for you to spend 20, 30, 50, 60 minutes, and then you realize you are talking to the wrong person. You'd rather spend your time with someone that you think you've got a good chance, so long as you meet their criterion. These are, on this slide, we have other things that I would always insist, or I would recommend, highly recommend that you be aware of in terms of your environment when it comes to procuring finance. The environment that you operate in and the people that you want to finance you is not a sterile environment, in the sense that they're not things that you need to consider in the external environment. The key ones here will be law and regulations, the tax frameworks and policies, capital repatriation restrictions. They exist in certain countries. So you might be seated in Tanzania, you're trying to get capital out of South Africa. And guess we all know that South Africa has got some of the most stringent capital movement or repatriation restrictions. So that could be a source of frustration for you, so sometimes make it very difficult for you to secure capital out of capital in the sense of cash out of a country like that. Trade policies, it's always good to be very aware of the, especially if you're doing cross-border financing, cross-border investment and trading, to be aware of trade policies that exist and how they impact your business. This is also something that was strongly mentioned by the last presenter, I think, Mr. Shukla, the question of structures that exist, such as Exim banks. You'd also throw in their DFIs and sovereign funds, and they're usually sponsored by states. My apologies there, that was not supposed to read it was supposed to read by states and multilaterals, and they aim to encourage international trade and international trade and investments. So those are things that sometimes being aware of the existence of these and how they function can make a huge difference. So for instance, I'll give you an example of something that I was involved in about 3 or 4 years back, where a decision had to be made about where to procure equipment for a manufacturing plant that was put up in Kenya. And one of the big considerations was that when you look at supply in Italy, in this case, I think there was Italy, there was one in Sweden, one in India and China. It was a question of one of them being able to, or one of them offered, because they had access to an Exim facility from their home country's Exim bank. They were able to actually offer this plant or this factory here in Kenya pretty good terms on on procuring this particular equipment. So always look out at some of these things, because some of these countries that we tend to source things from, especially European countries, I would say the more developed and even some developing countries, they do have export-import banks, and these banks, especially the ones that are country-based, they exist principally to try and promote sales or look at it as exports from those countries. So if you're dealing then with a company that let's say comes from India or from Italy or from the UK or China or whichever country has an Exim, always try and explore that possibility, whether what you are buying could be covered under the, an EXIM facility that would make life a lot easier for you when it comes to you getting not just financing, but getting financing at fairly competitive rates. The last two that I would say you consider are geopolitics and social politics, because as we all know, especially those of us from Africa, sometimes the relationships between two countries sometimes can actually affect how you do your investments and trade, and therefore where you source and where you source your capital, and how it flows back and forth of financing could be affected by, for instance, the relationships between two countries. So it's always a good idea to be aware of those. So ladies and gentlemen, thank you very much for listening to me. And at this point, I'll be happy to take any questions that you would have.
All right. Thank you, Ken, for taking us through a lot around policy, why business people need to take advantage. Need to be aware, and why. And I always tell people, a lot of this is maybe information that doesn't come naturally, you're not aware of it. That's why you need to go to experts so that they can work with you to make sure you're making the right decisions for your business. I like the fact that you are very clear on the funding requirements. You are very clear that people need to talk to the right people. I cannot tell you the mistakes people do. They go pitch to the wrong investors. And you gave people the 15 funding options around that. You're also very clear about law. One of the things, and I don't know if today we have people from Ethiopia, but we get a lot of people from Ethiopia coming to us saying they want funding. But the Ethiopian law says you cannot get debt outside Ethiopia, right? It has to be an Ethiopian company, commercial bank or fund that is funding you, which means then if you're in Ethiopia, you can't do that unless you set up a company outside Ethiopia to do that. So those are things that an advisor can actually talk to you about. In regards to policy, one of the things I keep telling people is you need to know your position, know your power, and lobby your government to support growth of the private sector. A lot is happening in the space of policy. I'm very interested in trade policy, and you alluded about that. When you're talking about geopolitics, it's like, what position are you in geographically? And Africa, everyone is looking at Africa because Africa is the core, right? You're right stuck in the middle. I don't know about you, Ken, but for me, I've actually been approached by people who are always coming from Europe. They want access to the Far East. So then now we have to talk to them about the east coast of Africa, right? So will they set them up next to the Mombasa port, the Lamu port, Dar es Salaam, Mozambique? That really is affected because of where you're located. If you're trying to go into South America or North America, then you want to be in the west coast of Africa. All these things are very important. But again, unless government there has the right policy, then you won't take advantage of this. But there might be policies in place that you're not aware. That's why you want to go to PIC to make sure that the decisions you're making for the long run are the right decisions based on where you are. And I believe Ken was very clear about that. In fact, Ken, there is a question here for you. And at the very beginning, you mentioned about incomplete projects. There's someone who mentioned they have 20 acres of land in Kisumu, and they want an investor to come help them build and sell. From a policy perspective, from raising investments, because they're on both sides, what would you tell a business person like this? People who say, I have 20 acres, I'm strategic in Kisumu, right? Next to Lake Victoria, really important in East Africa. I need people to put money in my project. What should they do? Should they just call you? Is there something you tell them right now to do? Yeah.
Thank you, Anne. Thank you very much. Yes, that would be a very interesting conversation to have. But I mean, it will start with understanding what the owner of the land, because that's the vision carrier, what they think or what they want with a particular project, or what vision they have. Sit down with, I would say they would need to sit down with an expert, if they are not an expert themselves, to look at the concepts that could possibly work for that. 20 acres. From a Kenyan perspective, I'm privileged to be a Kenyan, therefore I can comment on that. But 20 acres in any part of this country of ours called Kenya would be a sizable one. Within the proximity or in a big city like Kisumu, that could be potentially, a lucrative something. In this context where we've been talking about, Shukla, I think, mentioned it quite a bit, the matter of affordable housing. Again, that would sound exciting, but we would have to be able to understand what, at least broadly, the owner of the land is looking at. And then we try and then work together. That's something we're able to do ourselves and our associates, to try and work on a project or a bankable project that then can secure financing and facilitate the kind of end results, such as an exit to the benefit of the the property or the project promoter.
All right. Thank you, Ken, for that clarification. So Paris, you can reach out to the Invest in Africa team. They'll connect you to PIC to be able to now see if they can be able to help you. And anyone out there who has projects, right? The key here is you can raise capital, but also what have you done, right? Because earlier even mentioned, Ken, you mentioned that there are very many stalled projects in Africa, right? I don't know if you want to talk a little bit about that. What do people need to do to avoid that happening? We see a lot of stalled projects.
And that's a good question, one that I am hungry to answer, but I will also exercise caution because I would not always know why projects fail. But based on my experience here, projects, especially the mega projects, the biggest reason they will usually stall is, or I would say maybe two reasons. One, market scoping was poorly done. So someone set up to, let's say, put up a housing project, to put up a school, a retail center, but they had not understood their market properly. So they might go all the way, actually complete, but then what you find is an empty shell of a building, or with very poor occupancy if it's something that required sale or renting. Another thing, so market scoping, which means you understanding your market and making sure you're serving a market that actually exists. Try and avoid the temptation, which I think I have seen every so often, both here in Kenya and Uganda, where I've had some experience, some of those kind of projects, where people assume that I will build, if it's a building, and the market will come. So you build, the market never shows up, or the buyers never show up, or the renters never show up. The second reason why you might find a lot of these projects projects that are incomplete would be the question of financing. And I guess that ties in well with what we are discussing today. Anything that requires more than you have in your pocket, that is a project or a venture that requires something that is in your pocket at the moment that you hit the start button, would potentially suffer that fate. So how do you avoid that? So one of the things you would have to do, I mean, sometimes it takes, and I've seen people do that and they've gotten away with it, where they say, look here, I want to raise $1 million. In my pocket, I've got maybe 300. I'm struggling to get the 700. And it's because the people I approach, the banks and any other people, they don't quite believe me. But once they see me doing this, once they see I've broken ground, once they see I've brought in the equipment, or I've started putting up the building and that kind of thing, I'm sure they'll give me money. And sometimes it works, because sometimes all it takes to convince someone is to show them that you're serious about it, and then they will get to buy in, and they will do what you are looking for them to do, which is finance your project. But just as there are people who get away with it and it works, there are also many who struggle. So the question is, you start and you don't have all the financing, or sometimes you're not even sure where it will come from. And inevitably, then you'll end up with those kind of projects, which are very painful, because if, like, the hypothetical situation we were saying of you're looking for $1 million to put up maybe a building, you've got 300, you start, you've done part of the superstructure, you've run out of money and there's no one to finance you. Effectively, that's $300,000 that is stuck until when you'll ever get money, whether that will be 10 years or 15 years down the line. Sometimes we might not know, but that's money that ideally, if you ask me, you might as well have taken it maybe to, if you have access to a stock exchange or or securities exchange where you can buy bonds or shares. You might as well have taken it there or put it in a bank and earn interest if that's something you can do, rather than have it stuck in concrete for an indefinite period or an indeterminate period, and essentially to your loss. Thank you, Anne.
Okay, well, Ken, I think the two things I got is make sure before you start any project, there's market scoping. Make sure you do your feasibility studies. Just make sure there's market, right? You don't want to start something and then it stalls because, again, that's wasted money. And then the second thing I had you say is make sure your project is bankable or investable, that you know that by the time you're presenting it to people who have money, the chances of them saying yes is higher because they understand, you know, the market, the opportunity. It's very clear what that is. So thank you, Kenneth, for that. And we will see if there'll be more questions later on, but I'd like to go ahead to Janet, the next speaker. Thank you, Janet, for coming in today. I know you are very passionate about investments. You came from trade finance. Just like me, you are a banker, but you're moved by serving the community, and so you made the transition into investment consultant at Impact Dev. So, I mean, Janet, what I would really like for you to do is to share with the audience, what is it that you do at Impact Dev? What is it that you do to make sure that these businesses that have the ability to impact the communities that they serve, they get the right kind of funding, because that's what we're talking about today, investments. And also I know we don't have too much time, but I know a lot of people would love to hear what you have to say around trade finance. I mean, Ken just shared with us all these different options. And when he was sharing, I was like, I know Janet has something more to say about this. But there are very many different trade products that a lot of business people don't know. And because most people immediately, they think of funding, they say, I want to go into the bank and I want to get a loan, right? As opposed to really getting information on this. This is what you do day in, day out. Can you share with us for the next, 10 to 15 minutes? Just tell us what it is that you do at Impact Dev, what it is that business people need to be aware of so that they are able to then reach out to you to help them get the right kind of funding so that they can do their business as well. So welcome, Janet, and the floor is all yours.
Thank you so much, Anne. It's always, I hope you can hear me.
Yes, we can hear you very well.
Yeah. Yes, it's always hard to come after, very experienced speakers, such as what has just been presented by my prior presenter. But I'll try to, pick up whatever has not been already said by the rest. First of all, I'm a trade and investment professional with an MSc in International Trade and Finance. Like you've introduced, former banker, specifically focusing on international trade, trade finance, trade products, just anything trade. So, and I still, where a very big part of me still focuses on trade finance and development. And maybe just to delve into the subject of what Impact Dev does, we're an impact platform that helps organizations to actively consider the environmental and social impact in their investment and decision-making processes. We work with leading impact practitioners to offer solutions that accelerate delivery of SDG. And as we also accelerate capital, we are also working, I'm representing Euro-Exim Bank as a trade finance consultant to access non-funded products. So these are some of the products that you don't have to go and borrow alone, and I'll explain that in a bit. And these ones are very specific to help SMEs that cannot get the traditional banking products. So what we do, accelerating, how do we do, accelerating sustainable development in Africa, which is really pretty much our mission. How do we deliver that? We identify small and growing businesses and SMEs with high potential of meeting UN SDGs. When I say high potential, one of the speakers from DOB said about what they look at. Those are some of the things that we really measure to just ensure by the time you're engaging an investor, you know what is required. Other than that, we know that sometimes people don't, when we speak about impact, it's quite a new term. Impact investment has only been there for, it's been there since early 2000, so it's not been there for quite a long time, and not every financier has adopted it, so it's still a new term. So we help clients who are looking to get into impact investing or impact implementation to kind of be aware of what they need to measure, if they need to get support in terms of what we call impact measurements. We help them start, to put all those in place such that as they're measuring their financial impact, they're also able to say what it is they're doing on the social and environmental part. In addition to that, as I said, trade is really key, and obviously where Africa is right now, we need trade. So it's still a very big part of what we need to do to move the economy and grow the single market through the AfCFTA. We offer trade related support, especially for clients who are looking to go cross-border. I've delivered trainings to a group of women recently that were looking to establish a agro-processing plant, to process avocado oils and related oils for export, so that we elevate, selling without value addition. And also, creating a lot of awareness about what is AfCFTA and how we can take advantage of that. In terms of the impact, I think it's kind of critical just to say, because that's why we focus on, and maybe just to paint a picture of what impact investing is in a few words, and I'll try to be short given my time. Impact investments are investment looks at investments that generate positive, measurable social and environmental impact alongside financial return. So simply, we are not just looking at financial return, because we know startups, small and growing businesses, they might not show their profit, they might not be profitable immediately, but you'll find that it's a scalable business that we are expecting that it's going to grow. So impact investing is critically just having that lens of saying, what is the social and environmental impact in addition to the financial? So it's not really substituting, is actually just making sure that you're measuring all the three areas and you're ticking those boxes. Why do I think impact investment is important? We have relied on traditional foreign aid and also the traditional funding for quite a long time, and it's obviously it has helped to some extent. It has been helping. However, we know there's still huge gaps. The infrastructure gap that is in Africa, access to basic services in some of the places is not just available. Just to paint a picture, in Africa, we have some of the reports, studies have shown that $66 billion there's a worth of financing gap in health. When you look at education, there's about 89 billion as well. Agriculture, another $66 billion. So in every other area where we can say this is basic services, we can see there's actually a gap. IFC also confirmed that there was a SME gap of 331 billion. Obviously, the financing gap for the SME. Obviously, this has really widened given the COVID impacts, and it's going to widen unless something is done. And so given that 90% of African businesses are SME, what can we do differently? Is this going to be supported by just the DFIs or the financial institutions? I think the answer is pretty much no. And also the foreign aid. Foreign aid is mostly project driven. Due to COVID, most of the projects are not being funded anymore. So that's the impact. It's not sustainable. And again, are the people who are being given this aid, do they have something else to lean on? So this is where the relevance of impact investing comes in, whereby we're saying, can we support the people on the ground, the founders who have scalable transactions to actually start their own businesses give them patient capital. So impact investors have a high risk. They can take up high risk because they're investing in you as early as, when you're starting. One of the speakers was talking about the angel investing. They're happy to come in at that early stage. They are also not going to ask you for collateral. They are able to give you maybe just take a board seat, or just make sure you're able to run, and they'll guide you. So their risk is very, very different. The DOB was one of them. Patient capital as well. Grants, debt that is repayable over a long period. Some of them they do not ask for interest immediately, or they'll probably give you interest free. So there are all these options that are available through the impact investing that help the economies grow. Performance metrics as well. They're not looking at financial returns as their core way of evaluating that you're going to make it. So they are looking at social and environmental returns. And this is why we help the clients to actually get to give the importance to this as well as they're looking at the other areas of their businesses. Technical support. There's a lot of, most of these businesses as well, they'll ensure they have some money set aside to offer technical assistance, or they will connect you to the right people. So if you're a startup, if you're an SME, if you need support, I would say if you're at your early stages, this is particularly an area that may be of interest to you. Now, I think maybe just to go to the trade finance side, why do I think trade finance is also important? We are currently speaking about the single market through the Africa Continental Free Trade Area. A lot of these projects, we want them to scale. You start as an entrepreneur here, but you're using mobile technology. You want that to be used in Uganda and Tanzania. So, it's almost borderless already, especially using the scalable solutions that we have at hand. As one of the presenters say, investors are more willing to finance transactions that they can see that you're willing to expand in more than one market. So this also comes into play when you talk about trade policy. What do you need to understand around if I want to grow my business from here to Uganda? What am I gonna, what should I know about the other country? So there's the financing elements. There's a lot that has been said by my previous, the previous presenter, which was very, very important. Perhaps I can just add a few comments around that. The other thing you need to understand is the risk involved. So, you need to measure what is the risk involved in going to one country versus the other. What is the risk of payments? What payment products do I use? What are the banking facilities that are available, or what are the alternative financiers offering? What are some of the unique uncertainties facing importing and exporting customers? So this is a very important area that you need to really understand, so that you're able to start thinking scaling from the onset, because the financiers want to see that you have that scalability idea from the onset. We don't want to say that you have started just, you've not started a house and now after you've gotten stuck, that's when you want to come and say, I want the money. You want that model to be, to have focus on all the areas from the onset. So trade finance products are very critical when you're doing a cross-border trade. For example, just knowing that you can use the bank as a post office to send your documents. I've talked to a couple of exporters who did it for the first time and they got scared because they spoke to a vendor in let's say Dubai or any other country, and the first transaction went well. The second transaction, they didn't receive any payment. You know why? You send the goods and you send the documents directly to the client. So there's nothing he has, to hold on to. I mean, he's already gotten whatever he needed because the documents are actually allow him to go and clear the goods. So it's important to approach the advisory firms, the investment consultants, or if you have a relationship manager within the bank who can explain to you about the products. Some of these products do not require collateral, like using the bank to just post documents. It's called documentary collection. You do not need to put any collateral. Even for you to receive, you do not need to put any collateral. All you need to do is banks will charge around 0.25, and it could be different depending on the bank. Percent of their value, or they can, you can agree on a flat rate depending on what it is. But you find that it's a very small cost, which you could have paid using the shipping, following up for yourself, and the banks will also help you follow up for the transaction or the payment after that. So another critical area you can look at is the commercial contracts and use of commercial contracts to just make sure they are very clear on who to pay for what, insurance, who's going to pay the insurance, at what point are the goods transferred to the seller or the buyer, at what point, is it before from my warehouse, or is it when they reach the port? So those things are very critical. You need to understand what financial instruments you can use, what are the shipping documents and value of the documents of title, because the title is really like your logbook. Understanding payment risk. There's something that we call the risk ladder. So it's, you always put yourself and say, as a buyer, what's the best method that I should use? Is it advance payment, or is it documentary credit, or a letter of credit? So just evaluating at the stage where you are, what would be the most what is the most payment method that would suit you and cover your risk? So again, I think some of these things, they might sound technical, but if you sit down with someone who can explain to you, they'll analyze and see what your risks are. They'll help you just go through the whole process. And this is not even, we haven't even talked about the funding. We're just talking about what are all the critical things that you need to look at. Having said that, there's also financing that you can look at in different ways. There's a financing that can suit the exporter. There's a financing that can suit the importer. So, apart from financing, there are things that you can do, such as discounting your invoice, which can make you get early repayments. There are other products that are not sold within the banking. You can look at factoring, forfeiting, international leasing, which is very different. So I think there are all these providers out there, and I'm actually working with one of them, as I mentioned, which is the Euro Exim Bank. What we offer is guarantees and letters of credit with minimal or no collateral. So if you're an SME, if you're a startup and you think you want to import something, or even you want to export and you want to ask for these instruments, you can get in touch with me, or you can get in touch with any other investor to just help you understand the products. So finally, I think maybe I'll just mention the finance for importers. You can look at documentary credits. You can look at acceptance through the, the documentary collection. There are guarantees or indemnities. This does not require funds. I know there's one of the presenters who mentioned that it's not about the funding. So there are documents and there are other substitutions that can help you to actually get where you want to in terms of the trade. So I think I'll stop there. And if there's any, to be able to answer a few questions that I've seen coming in. But I'm really glad to announce that there's a lot of support that is there for SME, for startups, and just being on this panel, you can tell every panelist has actually brought that out. So thank you, Anne, so much, and looking forward to answer any questions that we may have.
All right, thank you, Janet, so much for sharing with us. I mean, you started off by saying that Africans need trade. It's time for us trade. The whole talk of aid, that's the past. This is the new normal, and trade is there. We have the Africa Continental Free Trade Agreement. We have trade agreements with different countries in the world. If it's Kenya, we have agreements with the UK, we're negotiating US. So there is no excuse around businesses taking it to the next level. You actually talked to us about impact investing. DOB is an impact investor, but you're very clear around what the impact investors are looking for. But of course, if anyone wants more information, Janet can share with that. But of course, you're the trade expert, right? And you are really talking about, the commercial contracts. A lot of people don't understand that if you're going to do business cross-border and internationally, you need those contracts so that someone can actually be able to fund you, because they fund you based sometimes on the other person. There's a lot of nuances, which is very different from local trade. And so that's why they need a consultant like you to be able to work with them and make sure that everything is right. The documentations are very important, like you were talking about. When does it move from you as the buyer to, you as the seller to the buyer? Is it when it docks to the other country, or when it leaves your port? There's so many things that a lot of people need to be aware of. So it's very important that people actually, it is very important that people are aware about these things. And I think that's where your expertise come in. So I'd encourage all of you to reach out to Janet to make sure that you're on the right track, and she can help you with that information. I'm very big on international trade. In fact, this year we set up the Regal Africa Center for International Trade. We are talking to people about taking advantage of these opportunities in intra-Africa trade, trade with the world, really working with them to understand the market, export potential, funding. So those are things which are there, and I know we'll be working a lot with you, Janet, because you're an expert in that. In regards to the questions, before we go to James, who is our last panelist, we have a couple of people here. And one of them, Jane from Kenya, talks about she's in the coffee and tea business. She would like to export. So someone like that, how would you help her if, for example, Janet, based on her name, I know she's female, right? A lot of us women don't have the collateral. So what is it that you can actually do in this case? She might have a contract with somebody in Botswana or Ghana or the UK to buy her coffee and tea. How can you actually help her to make sure that she gets her products into this market? We have someone else who says they're manufacturing sugarcane juice. How do you help her to export it to Malawi or Senegal? We have somebody in Nigeria who's saying he is actually doing value addition and his focus is healthy food. We all know we actually have to take care of our bodies, and healthy food is very important. How do you get him to take it to South Africa? These are real questions that people in the audience are saying. I have these products. I need the right trade finance products to take it to the next level, but I don't have collateral, and I really don't understand what guarantees are, what insurance I need to take. How can you help them? I'll give you 2 minutes. Let me give you a minute, but I also think that they can actually come and see you one-on-one so that you can give them more information. But can you paint a picture around this trade finance products for startups or SMEs who want to export to new markets?
Yes, thank you so much. Thank you so much for that question. So for the coffee trader specifically, I'm actually working with a company right now that's doing export of avocado. Avocado seems to be famous because I guess it's because it's on season right now. If you have a contract with a supplier, all we need to know is where is the supplier base? Can he, if we give you money from the onset and you confirm that you're going to send the goods, can the supplier give us that, can they pay us directly? Which ideally means we don't need to know what collateral you have because the goods are our collateral. And in case of anything, we can take hold of those goods. So this is one of the very interesting products for exporters. I understand Working Capital is actually offering this, and I'm their senior advisor in Kenya. So if you're interested in this product, you can, I'm going to put my email on the chat, And please contact me, because this is something that is really doable and you don't really need to touch your collateral 100%. In terms of accessing the market, again, this is something that we can discuss. Obviously, data and insight is very, very important. We need to understand which country do you want to export to and why. Is that the real, is that where the real market is? So I think a bit of just checking out on market dynamics would be helpful. But again, getting clients in these areas it's no longer difficult, because we have data around it, and we have expertise on connecting you to do business in different regions. So anything trade finance, we will be able to advise you on what is fit depending on what area of business you are in. There's something that is called the conversion cycle. So we just need to know at what point you are in that cycle.
All right. Thank you, Janet.
Yeah.
Okay. Sorry. Thank you, Janet, for clarifying that. So for the audience, you understand they are trade finance products, and they'll be able to assist you based on that particular transaction. That's the great thing about trade finance, so that as long as you have a contract on the other side and due diligence is done, they will be able to find something for you. So thank you, Janet. Let me just go ahead to James, who's the next panelist, the last one, before we take in the last comments from all experts, so that then we can finalize on this conversation about raising investment in Africa. James, are you still on the call? James? Dr. James Mburu? I don't know if he has left. We have Dr. James Mburu. He's from the United Kingdom. He actually runs Profcol, which is a microfinance. James, can you hear me?
Yes, now I can hear you.
Oh,
yes.
Okay, hi.
I was actually about leaving.
Oh, I apologize. We're running a little bit late, but I believe we need to hear what you're doing at Profcol. We've had these conversations about there is money, but businesses need to be ready for this money. So I know you have to leave, but could you just talk to our businesses who are on this call and share with them what it is that you do and how they need to position themselves for the funding? Thank you.
Okay, I'll be brief. Thank you for inviting me to this seminar. I'm glad to hear what others are doing. It seems that Africa is targeted by many funds. But I think it's Africa's time now to progress forward. It's a new frontier, as they say. So I'll just talk briefly about Profcol. We were set up as a company that does local funding, financing in the UK, commercial loans and mortgages. And so we have traditionally not been in international financing, but now we are there. We are in international financing, and we work with the certain funding consortium to finance various projects. Basically, we are covering a number of areas in the world, but one of them have a keen interest in Africa, of course, for obvious reasons. So, so what we deal with on the international side is providing project finance, not trade finance, to differentiate in trade finance. This is usually debt. It's two types. It will be debt, which is loans repayable over 20 years, and 5 years moratorium. Interest attached is from 1.5% to 4.5% based on the company profile. There are also equity finance available at 70-30. So the funder takes 30% and the owner retains 70%. There is no interest charge on this money, but the funder has to sit on the board until the full repayment is made. We habitually fund larger projects, which range from around $5 million at the moment. But we have been, because we have been receiving a lot of requests for lower level funding, we are trying to branch out to get funding support from our consortium that can support lower funding. By the moment, that is what we are doing. So we do larger projects, and mostly this should be essentially infrastructure. People putting up different business premises or apartments or factories or things like that. The projects can either be new or old, but if they are new, they have to, the sponsors have to demonstrate some level of preparedness, especially financially. Because when you're talking about a lot of money, you cannot come empty-handed. You have to be well prepared. You have to demonstrate in one way or the other that you are financially prepared. Because there's no funder that is going to give you money without your commitment, especially when it's a lot of money. So we finance all sectors, apart from, at the moment, tourism and traveling is out, basically due to COVID. But in a nutshell, we finance all sectors. So Profcol basically receives the applications from clients, and they pre-screen these applications. We send out the NCNDs and non-circumvention documents, get people to sign them, and then after that we exchange. We ask for a project summary to get an idea of what the project is all about. And after all what is signed, then we send something called a pre-qualification document, whereby we solicit information on the company. So it's a comprehensive document which will enable the sponsor to demonstrate his background, so that we can know him better, and what they have done in the past, their level of preparedness, and also what equity they do have in the project. So that's the first document that comes. So after that, if that document is successful, unfortunately, many projects do get stuck up here when we send this document, and maybe they find that the questions we are asking, for instance, we shall be asking for financial statements, past financial statement 3 years. But if you don't have financial statements, then you can produce forecasts, which have to be highly professional. And obviously, the other thing that we're going to be asking for is a professional business plan. And this is an area that we have found that from the African continent, they don't respond very well. They haven't come to the mindset of responding very, very well. And I guess that is a work in progress, I would say, for Africans in that sense, to recognize how important the planning stage is. So therefore, after that, we pass on to we pass our applications to, because we are an intermediary, our company is an intermediary, we pass to the consortium, the appropriate consortium that will fund, that is matched to a particular project. And the consortium is going to do the due diligence, and also get into contact. We establish contact with the client so that they can, talk more, and also arrange visits for to the site to evaluate on the ground how the situation is. So after that, then agreements are written, and then the funding is done. So, as I said in the beginning, because of the requests that we have been receiving, so recently we have been pursuing international license so that you can fund the lower amounts, and you can also fund the trade finance. So that is still work in progress. That's something for the future. We're also branching out to community lending, which means those projects which are more community oriented. For instance, businesses that have got the community at the end of the line, like smallholders, like business involving smallholders. It's a business, but it has a community connotation. And because this is very predominant in Africa, this is a point of interest. So we are procuring funds to be able to go to that direction, because we have also seen there is a clamor for funding in that area. So as I said, I'm going to rush this because I'm leaving. But one thing I can say is the problems that we encounter with the lending is lack of operational history, lack of commitment, funds, lack of cash equity or equity, the mindset of not preparing financial feasibility studies and business plans. So the preferred industries obviously would be the industries that produce goods for export. That is of particular interest. Why? The reason is because since we are funding in foreign currency, if we get a project that is exporting, then they are able to shield themselves against forex risk, foreign exchange risk. And therefore, we're particularly interested in projects that are producing for exports, whether they are producing raw goods for export, like agribusiness, or any manufacturing company that is producing for exports. So we are encouraging people in Africa to come into partnership with the South-North dialogue, partnership with the people in the diaspora, so that they can be able to partner together. Production is in Africa, and then marketing done in the diaspora. That's a good business model. So basically, in a nutshell, that is what we stand for. Sorry, I was rushing, but that in a nutshell is what it is.
Okay, thank you, James, and I apologize for running a bit late. It looks like there was so much content today, but I'm very glad that people heard what you had to say. I mean, project finance is big. We want to do big things. I do know, like, for example, there's a gentleman who says he's in Nigeria. He wants to set up a factory. How does he do that? And you have the solutions to that. We mentioned that the gentleman in Kisumu who wants to do real estate. Okay. You have the money for that, but as you've all heard what James said, is that you have to be clear. Do you want debt? Do you want equity? And I like the fact when you say debt, it could actually be 20 years, 5 years moratorium. That is music to many, in people who are in business. It's music to their ears, because again, these things are really capital intensive. But you say if it's equity, then it's 70-30, so you keep 30. But again, because you're investing, then they have to be, how do I say, they really have to be able to show that they have an investable business. I will just say the 4 things again that you said, because I will hope everyone pays attention to this. 1, you have to show operational history. Even if it's a new business, do you understand that industry, or somebody in your company understand? Because again, this is a new business, very high risk. The second thing is you need cash equity. Yes, you have land, but what else are you bringing onto the table? So that's also very important. You need commitment, no more hustling mentality. Can we just be in business to do business for the long run? And you will get money from Profcol and the organizations they work with. And business plan. You need to have a business plan. It's very, 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 very important. And to keep your financial records, you have to be able to tell what is it that is going on in your business, if you're already operating, or at least have financial projections, create a financial model so that an investor knows if I put money, what will be the potential outcome. So thank you again, James, for being part of this virtual webinar so that you can share with us that there is money when it comes to project finance, because we need a lot of funding in regards to projects, and these are very capital intensive. So thank you for that. And I know, like I said, we've seen people in agribusiness, we've seen people in real estate, so they will definitely need your services. Now, because of time, I just want to give 1 minute, 2 minutes max to each of the panelists. If you could just give us your last remarks by just sharing what it is you think are the challenges and the opportunities, and how can people reach out to each one of you when it comes to raising investments, when it comes to trade finance, when it comes to understanding policies that will help you make the right decisions, everything around investments. Can you just give us your last remarks, and then we will see you next time. So maybe I can start off with Janet. Janet, are you there? Maybe we can start off with you so that we can go to the next panelist.
Yeah. Hello?
Yes, Janet, we can hear you. We can't see you, but we can hear you.
I'm just going to switch that on. So, thank you so much. I think I was just going to say there's more opportunities than challenges. So let me start with the opportunities. I think, you know, when we talk about challenges, the first thing that just comes into mind is there's no financing, and everybody cries about it. But have we looked at what are the opportunities? If we are talking about 17 SDGs, for every SDG, there's something that can be solved, you know, when you're thinking about impact. And it's not only about the SDG, there are other measurements that can be used to show what you can do to the communities. So opportunities are not just for, you know, high growth corporates who are already in different countries. There's opportunities also for the startups. And I think if we appreciate that there's space for everybody, we will start seeing what is in there for us. Again, there's also financing available, not just the traditional financing. There's alternative capital. There's financing in terms of you know, being able to exchange documentation if it's guarantees that don't require collateral. And obviously, there's a lot of support from all the people who have raised their hands and said, if you need my support, come and speak to me. So there's a lot of support in all ways, including to the extent of project finance. So you're actually seeing that we have someone from the start to the end, an angel investor all the way to a project finance. So I'm not sure if I want to really talk about challenges, but that's a message I want to pass, that we are here to help. Now, if you want to reach to Impact Dev, you know, my email, I think Priscilla had shared her email, who is my colleague, but I could also share my email as well, together with the presentation. I'm available through the website, or, you know, I don't know where to put my contacts. I'm not sure if I'm able to put my contacts here, but you know, I can be reachable at janet@impactdeals.capital.
Okay. Thank you, Janet. You can actually put it on the chat. And thank you for reminding me. We'll focus on just the opportunities, not the challenges when it comes to last remarks. And I really appreciate for taking the time to give your insights, because a lot of business people, a lot of investors are saying there's a lot of opportunity. We don't know where to start. At least now we have you to come to and be able to, you know, walk us through this journey to do that. So thank you, Janet, for your time. We really, really appreciate you. So going to James, I don't know if James has already left. If you could just give us your last remarks and the opportunities that you see, we'd really appreciate that. James, are you still there? All right, it looks like James just left. So I'll go ahead and ask Jason. Jason, are you still on the call? If you can give us your last remarks and the opportunities that you see, especially for angel investors in this market, for businesses who are looking for angel investors.
Yes, thank you, Anne. I would like to write on what Janet has said. I mean, the opportunities are there, and they just don't have to be focused on impact only. They can also focus on the commercial element that those businesses can eventually create, similar to what Anne was resonating on what Anne had mentioned that there is impact, but also with commercial or profit, with a profit angle as well, sustainability angle, if you can call it that. Yes, so there are varied opportunities for angel investors if you just understand how to evaluate the opportunities that come your way. And for entrepreneurs, or even for angel investors as well, one of the key elements we have to focus on is just capacity building them to understand the sector very well so that they can be quite flexible when they're writing the checks to the early stage companies. And I believe setting up ourselves as a network is going to catalyze a lot of that capacity building element for angel investors.
Thank you, Jason, for the work that you do. It's really, really, really needed in this part of the world. We definitely need more angel investors. So thank you again for that. And you can actually just put your contact in the chat. Anyone can reach out to Invest in Africa team if you want to reach out to Jason.
Sure.
I'll go ahead. I still see Mr. JC Shukia still on the call. If you can just give us your last remarks and just tell us how we can contact you, that would be great. I apologize. Go ahead, Mr. Shukia.
A lot of noise in between, but am I audible?
Yes, we can hear you right now.
Yeah, I think people should have touched base on some of the issues which I was expecting, but since I was not clear, I did not talk about it. But the World Bank is covering political risk in Africa. I think this kind of thing would have helped us when we face a challenge in Kenya with old government. So this is one I think we should have brought into the discussion for the investors to get the secured, to have sense of security. The another one is that there are a lot of bilateral treaties. I was talking only about Indian bilateral treaties, but there are a lot of bilateral treaties between various African countries and various different countries in Europe, America, Asia, and all. This also could help. And last but not the least, Africa must look at innovative models where you can also make funding available without cash funds. You are only talking about hardware, money, and money. But the resources need not be hard cash. Resources can be in kind. Resources can be in different kind of business model. I think there are lots of business models world over which you must replicate. This is my take. Over to you. And thanks again for inviting me in.
Thank you, Mr. Shukia, for reminding us investments really doesn't mean only cash. It could be in various ways, and also reminding us about bilateral trade agreements. So thank you very much about that. And I think that's a good segue to Ken, who's all about investment advice around policy, what business people need to do and understand. If Ken, if you can give us your last remarks, would appreciate that. And the opportunities you see. Ken, are you still on the call?
Yes, I am, Anne, and thank you very much. In terms of opportunities, I think my co-panelists have covered pretty much everything that I would want to say. Just to request those participating in the call or in the webinar today to pay particular attention as they do whatever it is that they do. Your everyday life, but especially what brought us here today, business and trade. Pay attention to policy. In some cases, you will come across opportunities that you never thought existed, just out of awareness of the policy around you. You will solve some of your problems in the countries that you operate in, out of being aware of the policy provisions that are there. So please pay attention to that. Talk to those who are able to help you, whether it's in the broad area of policy or very specific aspects of policy. In terms of getting in touch with me,
You got cut off, Ken? Okay, I don't know, for some reason we lost Kenneth.
Hello.
Okay, I can hear you now. Go ahead. Yeah.
Okay. Yeah, there seems to have been a problem there. So I was saying I'll shortly share my email addresses on the chat, and you should be able to get my presentation from the organizers of this webinar. Thank you very, very much for listening to me.
All right. Thank you, Ken. Thank you for reminding us that know the policies, so that you take advantage of the opportunity. That's what a lot of people do. They miss the opportunity because they don't have all the information. So if you need any advice, then go ahead to Kenneth, Muchina at Progressive Insight Consultants, and they can help you if you're in Eastern Africa. So last but not least, I'll reach out to Njuki of DOB Equity. If you can just share with us your last remarks, tell us what are the opportunities that we see, and then we can take it from there. Njuki? I'm not so sure if she's left, but if Anne is not here, I'll just go ahead and invite John Karegwa of Invest in Africa. If you could just give us the vote of thanks, last remarks as we close this webinar for today. Thank you, James. Hello? John?
Yes, Anne.
Yes, thank you. Can you just give us your last remarks? And thank you again for putting this webinar together so that we can have this discussion that is really, really important around raising investments and trade finance in Africa.
Thank you very much. And I don't know, Nick, can you release my video? All right. Thank you very much, Anne, and the panelists. Very, very resourceful panel. I think one of the most important things that I've also learned today is you have, and this is for African businesses, is that you just need a sound business idea, and there is money. You don't need to think about money first. Maybe you need to think about the idea first, and you can utilize investors' money to set up your business. We are, achieving our mission of connecting businesses to businesses and also connecting businesses to funders. Right now, we are building our network to about 2,000 businesses, very resourceful. So let me just acknowledge the participants by their names. Jason from Victoria Ventures, thank you very much. Kenneth, Progressive Insights, thank you very much. Janet, C.E.O. Impact Dev, thank you. Victorine, Strategia Business School. Dr. Mburu, International Director, Profcol Microfinance. Njuki, Senior Investment Manager, DOB Equity. And Mr. Shukla, Managing Director, Nahak Overseas. And of course, our moderator, Gaitha, thank you very much. And I want also to thank our team, our technical team, Victorine, Nikron, Walter, Debbie, Peter, thank you very much. And just to mention that these recordings are available on our YouTube channel on Strategia Business School. You can check them out, including the last four webinars that we have recorded. The first one was investment opportunities in Africa and the impact of COVID-19 to business. Opportunities investing in Africa and the Africa Continental Free Trade Area. Opportunities in digital economy, and the current one, raising investment and trade finance. Thank you very much, everyone, for your time. And let's keep the conversation on Invest in Africa running, and let's share the opportunities. Thank you. God bless you, and God bless Africa. Bye.
It's no secret that Africa is the next frontier, and you can be the next big investor. At Strategia Business School, we'll offer you a monthly masterclass that will help you build your network among respected entrepreneurs and business leaders and guide you on the opportunities available and how to mitigate any challenges of investing in Africa. Our African Business Club will also introduce you to our team of African business mentors and fellow investors, all tailored to your very own needs. Among the modules covered are doing business in Africa, raising investment and trade finance, importing from Africa and exporting to Africa, agribusiness opportunities in Africa, and understanding the African market. You can also register for online diploma business courses with a flexible learning schedule. Some of our courses include Diploma in Digital Marketing, Diploma in Sales and Marketing, Diploma in Finance Management, and Diploma in Logistics Management. Certificate courses run for 3 months, while diploma courses run for 6 months, and you can register at the beginning of every month. The cost for certificate courses is 500 euros, while diploma courses cost 800 euros. Take action and register today. For more information, contact info@strategiabusiness.com or visit www.strategiabusiness.com. It's no secret that Africa is the next frontier, and you can be the next big investor. At Strategia Business School, we'll offer you a monthly masterclass that will help you